All right, listener, ready for a deep dive. Today, we're tackling AMI Organics. They're doing some really interesting stuff in pharmaceuticals, semiconductors, and even EV batteries. We've got their earnings call, investor presentation, and some industry insights. So let's jump in.
It's pretty remarkable how well AMI Organics is performing, given the current economic climate.
Yeah, the chemical industry is facing some serious challenges right now.
Exactly. Slow demand recovery, pricing pressures. It's a tough landscape.
Definitely. But AMI Organics is kind of defying gravity here, with a 43.2% year-on-year revenue growth in Q2 of FY25.
It is impressive. How are they doing it? One key factor is their focus on pharmaceutical intermediates.
Pharmaceutical intermediates. So we're talking about the building blocks for medications, right?
Exactly. The stuff that goes into making the drugs we all rely on. And AMI Organics specializes in intermediates for chronic disease medications.
Okay, so things like cardiovascular disease, diabetes, even cancer.
You got it. They manufacture over 550 products across more than 17 therapeutic areas.
Wow, that's a lot of ground to cover.
It is. And it's a smart strategy because demand for these medications tends to be much more stable, even when the economy takes a hit.
Yeah, makes sense. People prioritize essential healthcare. So it gives AMI Organics a consistent revenue stream regardless of those market fluctuations.
Right. It's like a built-in safety net in an otherwise unpredictable industry.
I like that analogy. So they've got that stability.
Yeah.
But their growth story doesn't stop there, right? What about their move into the CDMO space?
Yes, the CDMO business. That's Contract Development and Manufacturing Organization.
Right. Sorry. For those of us who don't speak acronym.
No worries. Essentially, they're partnering with big pharma companies to develop and manufacture key ingredients for new drugs.
So they're working with the innovators, those developing cutting-edge treatments, and then also generic drug manufacturers.
Exactly. They're hitting both ends of the spectrum. And this segment is really taking off for AMI Organics.
They even just received a GMP compliance report from the Japanese regulatory agency, PMDA.
Oh, yeah, for their Sachin facility. That's huge. It speaks volumes about their quality standards.
And it opens doors to the lucrative Japanese pharmaceutical market.
It does. Now, speaking of opening doors, AMI Organics isn't content with just dominating the pharmaceutical space.
Oh, there's more.
Much more. They're branching out into other specialty chemicals.
Like what?
Well, things like the chemicals used in cosmetics, and even the super specialized ones for semiconductors.
Semiconductors. Isn't that market facing a bit of a slump right now?
It is.
Yeah.
And that's actually where things get a little bumpy for AMI Organics. They have a subsidiary called Baba Fine Chem.
Baba Fine Chem. Right, I've heard of them.
Well, they hit a bit of a snag this quarter. Their slowdown is directly linked to that global slump in the semiconductor industry.
So consumer spending is down, there's excess inventory, and that's putting a damper on demand for semiconductors.
Exactly. It's classic right place, wrong time.
But the semiconductor industry is notoriously cyclical, so it's likely to rebound eventually, right?
Precisely.
Yeah.
And AMI Organics knows this. They're wisely looking towards other high-growth sectors in the meantime, like electric vehicles.
Now, this is where things get really interesting. They're developing those electrolyte additives for EV batteries, right?
They are a massive market with incredible potential.
And they've secured sample approvals from 6 customers already.
It's a strategic move to capitalize on that global shift towards electric mobility. And remember, this is all happening while the broader chemical industry is grappling with sluggish demand and cost pressures.
It's almost like they've cracked some secret code for success. And their investor presentation really emphasizes this proactive approach. They're wrapping up a major expansion at their Ankleshwar facility.
Which is going to triple their production capacity.
Exactly. And they're building a brand new plant dedicated to those EV battery additives.
They're firing on all cylinders. And they're not just focused on growth. They're incorporating sustainability into their strategy, too.
Oh, yeah. They've got those zero liquid discharge systems, a high wastewater recycling rate, and they're even investing in a captive solar power plant.
Very forward thinking.
Wait, didn't they even have to deal with monsoon rain delays during the Ankleshwar expansion?
They did, proving that even the best laid plans
have to factor in Mother Nature. Okay, let's talk financials because these numbers tell a compelling story. They're boasting strong EBITDA margins, healthy cash flow, and a solid balance sheet. What are the key ingredients in their financial recipe for success?
Well, their raw material sourcing strategy plays a huge role.
What do you mean?
They've strategically shifted to procuring around 71% of the raw materials from domestic vendors.
That's brilliant. Not only does it reduce their reliance on those volatile global supply chains, but it gives them greater control over costs and quality.
Exactly. Talk about turning a potential risk into a strategic advantage.
Absolutely. Their financials really paint a picture of a company that's in control and well-positioned for continued success. But let's dig a little deeper into their business model, shall we? I'm particularly intrigued by their approach to the advanced pharmaceutical intermediate segment. It sounds like they've found a unique way to navigate that market.
Yeah, their approach is fascinating.
Yeah.
They're active across the entire value chain. So from supplying what they call new chemical entities, or NCEs.
NCEs.
Yeah, NCEs. These are for those innovative pharmaceutical companies developing brand new drugs.
Okay.
To them providing a diverse range of intermediates at different stages of the production process.
So they're not just focusing on one specific type of customer. They're catering to both the innovators and the generic drug manufacturers who come into play once patents expire.
Exactly. It's a really smart way to diversify their revenue streams.
Makes a lot of sense. And their R&D expertise seems to be a major differentiator. They're often first to market with many of their products.
Right. They've got a dedicated R&D team.
I think their investor presentation mentioned over 110 people, including 11 PhDs.
Yeah, it's a serious team.
Yeah.
And they're constantly innovating, developing new and more efficient ways to synthesize these really complex molecules.
So they're able to offer their customers multiple options, often with cost advantages or improved yields.
Right. It's like they're a one-stop shop for all things pharmaceutical intermediates, no matter what stage of development a company is in.
And they've got the patents to back it up. 15 process patents filed for advanced pharmaceutical intermediates, with 10 already granted. That's impressive.
It is. And it's earned them preferred supplier status with a lot of major pharmaceutical companies.
That makes sense. Pharmaceutical companies need reliable partners, especially those on the cutting edge who need consistent quality.
Exactly.
Plus, they're strategically focusing on chronic disease medications, a market that's only going to grow as the global population ages.
Right. That focus ensures long-term sustainable growth, even as the pharmaceutical landscape changes.
So to recap their approach to pharmaceutical intermediates, top-notch R&D, a diverse product portfolio, focus on high-growth markets, and a commitment to quality.
And that translates to some impressive numbers. They reported a whopping 53% year-on-year growth in Q2 of FY25 for this segment alone.
Wow. Okay, now let's shift gears and talk about their specialty chemicals business. While pharmaceutical intermediates are their bread and butter, this diversification strategy is crucial for weathering those industry storms.
Definitely. Especially given the cyclical nature of some chemical markets, like we saw with that semiconductor slowdown that impacted Baba Fine Chem.
Right. So where are they focusing their efforts within specialty chemicals? Their investor presentation mentioned everything from cosmetics to semiconductors to even agrochemicals.
Their portfolio is incredibly diverse. They produce things like parabens, which are used as preservatives in cosmetics.
Okay.
And even really niche things called KSMs, or key starting materials. These are the essential building blocks for more complex chemicals used in tons of different industries, including fine chemicals and agrochemicals. They're even the only Indian player producing those photoresist chemicals for the semiconductor industry.
But the real buzz seems to be around their venture into battery chemicals, specifically those electrolyte additives for EV batteries. It's a relatively new area for them, but it sounds like they're already making some serious progress.
They are. They've secured sample approvals from 6 customers already.
6. Wow.
Yeah. And what I find particularly noteworthy is their cautious approach. They're not rushing into massive capital expenditures until they have firm contracts and a clearer understanding of the demand landscape.
That's smart, especially given what Naresh Patel mentioned in the earnings call about some recent deferrals in EV battery investments. It's better to be strategic and measured than to overextend themselves in a market that's still evolving.
Exactly. They're focused on securing those long-term contracts before committing to significant capital expenditure. It's a sign of prudent and disciplined growth.
So in the specialty chemicals arena, they're all about diversification, riding the wave of emerging trends like electric vehicles and maintaining a measured approach to investment.
You got it.
And let's not forget their commitment to sustainability. It seems like it's woven into the very fabric of their operations. Those zero liquid discharge systems, the high wastewater recycling rate, and that investment in a captive solar power plant. It all points to a company that's taking their environmental responsibility seriously.
It's refreshing to see, right? They're not just chasing profits. They're striving to be a responsible corporate citizen. It's a point that often gets overlooked when we just focus on financials.
Yeah.
But it's increasingly important to investors.
Absolutely. It speaks volumes about their long-term vision. They understand that sustainability isn't just good for the planet, it's good for business. attracts investors, reduces costs, and enhances their brand reputation.
Now let's get back to those financials, because they truly showcase AMI Organics' efficiency and profitability.
They're boasting strong EBITDA margins, healthy cash flow, and a solid balance sheet, all while navigating a challenging industry landscape. What are the key drivers behind this financial strength?
Their raw material sourcing strategy deserves a lot of credit. They've made a deliberate shift to procuring around 71% of their raw materials from domestic vendors.
Yeah, that's huge. We've all seen those global supply chain disruptions. So reducing their reliance on those volatile markets, that's got to be a big advantage.
Oh, absolutely. Plus, it gives them greater control over costs and quality.
Right. It's all about managing those risks. And they're not stopping there. They're constantly tweaking their production processes to improve those yields and minimize waste.
It's all about efficiency.
Exactly. And that operational leverage, the more they produce, the lower their per unit costs, right?
Right. It's like a volume discount.
Love it. And they're doing all this while maintaining a really healthy balance sheet. Even after their recent QIP, their debt levels remain pretty low, and they've smartly allocated a big chunk of that money to debt repayment.
It's a sign of good financial management. Gives them the flexibility to invest in future growth without being weighed down by excessive debt.
Makes sense. And they're being super strategic with where they're putting their money, their Ankleshwar expansion, the new electrolyte additive plant, and even that captive solar power plant, all carefully aligned with their long-term growth strategy.
It's about making calculated decisions, focusing on those areas with the highest growth potential.
No kidding. They're playing the long game. And their financials definitely reflect that. What I find so compelling about AMI Organics is that they're not just surviving in this tough industry, they're thriving.
You're right. They found a formula that really works. Strategic diversification, commitment to R&D, operational efficiency, prudent financial management, and that embrace of sustainability.
Oh, and let's not forget their knack for anticipating and capitalizing on those emerging trends.
Absolutely.
Well, this deep dive has been incredibly insightful. It's left me wondering, could AMI Organics be on track to become a major player in the global specialty chemicals market? It's definitely something to think about as you do your own research. Thanks for joining us for this deep dive into AMI Organics. We'll see you next time.